Okay. Welcome to the show, guys. Welcome to the show. Sorry for the slight delay, or actually, I'm about 1 minute early. I can see some people are already here on the show. Thank you very much. Appreciate that. If you're new to the show, guys, we're going to talk about different stuff on this charts that most people don't talk about. This channel is quite unique in that sense. We don't talk about the regular stuff and stuff like this. Also, in this channel, I do try and answer as many viewer questions as possible. So if you have any questions or comments, please fire away and you'll have them answered. That's not an issue. The only thing you're not allowed to ask is what the balance is. But anything else, everything goes basically. Anything on this channel goes. We don't have a problem. If you have a favorite coin you want me to do an analysis on, let me know. No issues at all. So let's get into the show, because I got quite a few things. I don't know if you can see this here. This is a golden cross. We did draw and predict ourselves where we could be seeing this now, based on how fast the market moves or how slow the market moves. And what we did want and would have been very healthy is this golden cross, this particular area where the 50-day moving average is going to go above 200-day moving average. So what we're looking at, this 50-day moving average will go above, and this 200-day moving average will go back down. And I think I tried to explain something to someone yesterday, right? So I'm going to try and explain it here to all of you guys, and I'm going to do it in the most simple way as possible. So what I'm going to do is draw a few lines, say 1 line, 2 lines, 4. Let's just draw 4 lines, right? And we've got, say, 21. Okay, we've got the 50, got the 100. Right, and what we're doing is we're basically drawing the moving average line and the 200. Right, so imagine we have these 4 lines here, and we've got many more. We can use 7 days, 9 days, 350 days. It doesn't matter what we use. The point I'm trying to make here is, so you've got these lines: 21 day, 50, 100, 200. This is in perfect order. So if we have them in this particular order, this means it's perfect order, right? But say what happened here, we had the 50-day moving average falling below the 200-day moving, right? So we had this imbalance, right? Where basically, the law of, the maths that we have, right? It's not natural for 50-day to be below the 200-day, right? So we can call this an imbalance, and this is what's happened here. This is exactly what happened here, right? You can see this is when it happened. So we had this imbalance, and now we're coming back to balance out. We're coming back to correct the pattern. The pattern that we're going to be correcting is going to look something like this, for example. So let's go back here. What we're going to see is pattern coming back to normal means this, where the 50-day is on top and 200-day is on bottom, right? That gives us a balance, right? So it brings back everything that we need and how we need it, basically. So that's all I wanted to show you, is like we need it to be in order, and this is what the golden cross does. But there's more to this golden cross. Or even not more to the golden cross, actually more to the current situation of where we are, right? So what we need to do is kind of observe this situation and say, okay, we understand that we're about to have a golden cross. We can see the projection is showing us that we're going to have it around, and this is quite funny, around the specific day of the next options expiry. Remember, I always tag all the options expiry. This would be our next options expiry, which is the 24th of September. So we can see that this is exactly what's going to be happening around that particular time. And we know what happens whenever we have an options expiry. We end up seeing a little bit of a pump, or maybe sometimes even we end up seeing a little bit of a dump right just before it. Either way, we see a pump and dump around that specific day. So there will be some kind of a crazy scenario where everyone's going to freak out. Okay, and it's quite common this happens. And let me just take this away. Right, so I'm just going to leave a few lines here, not too many, because I want to show you a few bits and bobs here. So what we've got here, obviously, situation, and yeah, let me just, I think this is good enough. That's right, let me show you this, right? So what we've got here is this particular trend line, and we had a trend confirmation here, but we didn't really have the breakout confirmation yet. And this is the key, right? So you need to understand the breakout confirmation, how it works, right? And also when we're looking at the time frame, right, we can see that this particular trend line, we've only calculated up to a specific amount of time. So if we now move this over, say for example, I'm trying to keep it in balance so it don't we don't break the trend and try and keep it in the line, I'm going to bring it right down here. So I've brought it all the way down to this 20k, right? And there's a big reason why we brought it down to this 20k, and I'll show you, because it is fascinating when you start looking at things in a different perspective, right? And the perspective is very simple. You look at these patterns here, how we have up and down patterns, right? How we have these patterns. These are known as Elliott wave, right? So on an Elliott wave, you have two different patterns. One is your Elliott wave that's going to play pretty much, it's going to go from, say, for example, 1, 2, 3. For example, say this is wave 1, wave 2, right? And then, for example, let's see. So, for example, like this is your upward trend, right? So you have this. But in reverse, you also have a same pattern playing in reverse. So whenever we do this, what we end up seeing is a pattern doing the same thing, right? Normally some people would come up with and say, oh, it's a head and shoulders and that. But that's the pattern we play, right? So Elliott wave would kind of do the same thing in reverse, right? After we've completed it, and which is also known as an ABCE wave, right? You can have a 1, 2, 3 pattern, and you can have a 1, 2, 3, 4, 5 pattern, and you can have an ABCE and an ABC, right? ABC basically. So imagine it this way, right? So this is how it works, right? So what we're looking at currently, and this is important so you do understand what's going on right now. So we've had this situation where we've had this particular area, we've come in here, and we've just done something like this, right? Where we went like this, like this, like this, like this, like this, right? We've just done this pattern. So if you look at this pattern, you got, say, for example, wave 1, 2, 3, 4, 5. We've had this, right? And this would have been our longest wave over wave 3 in a mini trend, right? Now what we expect is an ABC correction. So if we are expecting that, what we will see is A, B, something like that, right? But let's put it into actual perspective and say, okay, what's the most likelihood and how does it do this, right? So how do we double check all of this? So what we need to do, first of all, look for our traffic zone. So we go back, because here, as you can see, there's no traffic. There's nothing here. Only candles we can work with around this area here. So when we're looking for a balance or area where we say, okay, we have a traffic zone around this particular area, where would this traffic be, right? So we're finding that this particular range here, there's a bit of a traffic. Actually, let me change this. Let me do it differently. Let me do it like this. So we take the bottom of this. In fact, I've got to do it this way. We take the bottom of this and we say, okay, this is the area that we've got a bit of traffic. And then if we come around here, traffic zone ends around this particular area, or even if we can use this particular area and say that's it. So you can see we've just taken all the noise out. This would be the noise, all the wicks and everything. We find this area. And what we can see here is we've got this imbalanced zone of 44 to 46, right? So we've got this previous support and resistance areas there. Now, when we have this, we say, okay, what's going to be the top of the range, right? So we're going to look for the top of the range, and we can use a Fibonacci, or we can use anything for this, doesn't matter. So ultimately, what we're seeing is we're going to have, we've already got this pattern, right? So we started the pattern from here, we've done this. We're going to either complete the pattern here, or maybe even go up to here, then do this, right? Come up to around this particular area, say about 45, 46 level, whatever, 45, 50. We can use the Fibonacci to calculate this. We have this. Then what we see, we have a pattern going down, okay? Maybe doing something like this, touch this, go down here somewhere, and then basically come all the way down here just for the sake of it, right? Just for the sake of showing you. So we have this. Then we have the next wave, which would be, we have to break this leg. So we would basically go and smash through this, right? And then continue like this, and we create another pattern. So this is what the Elliott wave theory shows us basically now, but there is a problem with this, right? So I don't mind the Elliott wave theory. Sometimes the thing is not many people know how to work with it, and it is a very, very advanced indicator. The problem is that it's kind of subjective to who's drawing it and where they're drawing it, because if you look carefully, and I'll do the wave patterns just to show you. If you look carefully, we've had these patterns pretty much everywhere. We have them on minutes, we have them on 15 minutes, we have them on 4 hourly, it's all there. One thing we can confirm though, looking at this pattern, right, is that, okay, even if it's subjective, even this is me putting it there, right, or anyone put it there, it doesn't matter. One particular fact that we cannot ignore is the trend line. You see this trend line, this longer trend line? Make it larger for you so you understand what I'm saying. Let's make this 4. You see this trend line we cannot ignore. So everything else we can ignore, because Elliott wave plays in, as I said, minute candles, 5-minute candles, 15 minutes, 30-minute candles. Doesn't matter where you put it, you're going to have these wave patterns, and every one of them is an ABC, and every one of them is a 1, 2, 3, 4, 5. It doesn't matter. It's a pattern within a pattern. This is how Elliott wave works. I mean, I can even do a Google search and show you guys, I believe, right? I think I can just show you. Let me just show you Elliott wave. Let me show you what an Elliott wave pattern does, right? So here, let's have a good look at this, right? And you'll understand what I'm trying to say here. Let's open this up and let's have a look at this. I'll show you what I mean. You see how this works? It's within every angle, every triangle here. Let me see if I can zoom. Yeah, I can zoom in. Right. So what you're seeing here is every time we have a high and a low. So you use your higher high, higher low, basically, or lower low, lower high. Doesn't matter. This is the pattern. It's always there. You always got your 1, 2, 3, 4, 5, and then you got your A, B, C. 1, 2, 3, 4, 5, A, B, C. You know what I mean, right? So this is how this Elliott wave works. It doesn't matter. Whatever you do here, you're going to see a reversal here as well, and it will always continuously do this: A, B, C, D, E, and then, you know, continuously. So we have our move up and a move down. So it depends. Totally depends. If you look carefully at the actual momentum of the market, right? So you can only draw these ABC, right, based on what direction the market's going. So one particular fact that, as I said, we have here, for example, here, one of the fact that we have, and we know what the momentum is, currently we have this trend line. So the only thing we can bounce off is this trend line, right? And this trend line could easily drag us, right, all the way down to this, you know, for example, we have this zone here, which is the 24, 25K to 22K. We had this box here the whole time, right? We could easily come into this area. Now, I have written here official bear market if we go below this box, right? So you may have noticed this on other videos as well. It's always been there, right? We look at the Fibonacci line and we say, well, this is the Fibonacci line. This particular area, this 27K, is like the last line of support. We've talked about it. So can we have this particular indicator, or, like, you know, the drawing that we just drew? And we have a situation where we might actually bounce this, you know, go up a little bit to this level here, for example, come back down and then continue down, you know, have our ABC wave, right? Or even come all the way down here and then shoot back up. Can we do this? Maybe. But this question came up from someone who's very respected in the market, actually. And I want to say this, so this is quite funny. What he said. So the person who done this particular pattern analysis, he said, 46K, we're going to go there, we're going to touch the 46K, and then we're going to go all the way down to 23K. Excuse me 1 second. All right, okay. So yeah, so what he said was basically we're going to go to 46, and then we're going to bounce down again to what do you call this, 423, and I'll show you the tweet itself. I can show you. Oh, yes. Where is my man gone? There we are, right? Let me just show you what he's talking about so you'll understand. He's even pinned it, which is really good. This is basically a hypothetical thing, but what he says, I will trade this scenario until it gets invalidated. He's been very specific about this. He said, look, based on this, you know, as you can see, he's using Fibonacci just like I do as well. Based on this and the longer trend line, basically, this is what he saw. He said, okay, we can actually come into this zone, we can go down to this zone, have this 1, 2, 3, 4, 5 downward correction wave, and then shoot back up again. This is a hypothetical scenario. Obviously, what he's saying is if we don't come here, then it's not trading here. You know what I mean? So yes, it is a bit confusing. A lot of people don't understand, you know, but sometimes just understand that he's not saying anything. He's not saying this is a must, this will happen. He's just explaining that this is a likely scenario that we could have. If this was an ABC wave, then we are definitely going to have a 1, 2, 3, 4, 5 downwards wave, right? Remember, 1, 2, 3, 4 can go upwards and downwards. Totally depends on the trend. And as you can see, this is the exact trend line that I'm showing you here. And I've shown you this for months. I don't change my charts, guys. You know this, right? I've shown you this line for months and months now. So based on this, as I just said, we can come down and we can go around testing these zones, right? But everything is invalidated at one point. Let me explain this to you. So remember what I drew here. if we have, so for example, currently I spoke to someone last night actually, and I said we might, as long as we can hold this at 42k level, for example, by the end of the week, we're fine, because that gives us a higher high on a weekly. And what I mean by that, I'll show you. For example, if you go on a weekly candle, candles, right? See what I mean? So we have 1, 2, 3, and this is the fourth one forming now. But we're just doing higher highs, and that means we need to hold the support line. And I mentioned this specifically, we need to hold the support line. Going back to dailies, right? What you see is basically, if we did come down here, it's absolutely fine. It's absolutely fine. If we come down here, we come here, we test this, and then we move up slowly, do whatever, it's fine. But remember, for this pattern, like the downward pattern, to be invalidated, means all we have to do is make sure we don't go and touch this support. So what we're talking about, say for example, let me make it larger for you so you understand what's going on. So imagine this particular bottom here. So we had this red candle yesterday, which was brilliant in my opinion, because we need to create support as we move up, right? And that's exactly what it did. So this was the high the previous day, this was the high yesterday, and what we did, right, a lot of people don't realize this, we created the support. And you see here, we actually found the support and we supported the support, if that makes any sense to you, right? And that's the kind of stuff that invalidates it. That means that basically we might not even see this 42. So when we're looking at this pattern, now we can say, okay, if we did have this situation, are we going to bounce here and confirm this to be our area and then shoot off? Well, if we did that, every other theory below this line here is invalidated, if that makes any sense to you, right? But if we break this support line and we do something opposite, for example, we come and do something like this, right? We come and we break below and 42, then it's still in play, you see? Then this becomes our resistance. This line becomes our resistance. So it's in play. Does that make any sense? Right? I hope it does, because it is kind of crazy, right? Because the thing is, you got to look at it in a actual factual way. There is a support, there is a resistance. This was a resistance. So for example, when we go back into this, what you see here was, if I put a line here, I'll show you, right? Let me put a line. Actually, no, let me not put a line. Let me do this for you so it's easier, and we can all observe this and I can explain it better to you. Let's do this. Let's make this into a nice darker color box or something. Make this into a lovely box. Make it darker so we can talk about this, right? So what we're looking here is the bottom would be our support and the top would be our resistance, right? And you can see we broke that resistance, smashed through that resistance. Now, obviously, if we fall below the support, then what I was saying, if we fall below the support, then this becomes our resistance, and we can have whatever pattern anybody is predicting as a hypothetical scenario, absolute support. Invalidation happens when we basically come to this support and resistance. So this was previous support, we broke this, and if we hold this as support and now start moving back up, then everything is in. If that makes any sense, because it's okay for TA guys and analysts to basically turn around and tell you, oh, I'm doing this and I'm doing that, but they're not really explaining to you what it really means. And this has kind of become my job to explain to you guys, right? Guys, where does it invalidate? Yes, you're not going to do this until it invalidates, but tell us where, right? That's what I think a lot of the followers are asking. The questions they're asking is, where do you invalidate? Well, now you know that we invalidate if we bounce here and then up, invalidate. And then this particular area, it's the actual scenario, Mr. Fibonacci, the exact scenario he drew. If we start bouncing on the line, then he's in play, right? Everything he says is in play. That's not an issue, right? But we need to break this support area. So yeah, I mean, I don't know what to say. That's all I can say basically. So I'm just trying to make it clear for you guys. Obviously, there's a lot of data, but sometimes you just got to make it clear. And this is where all of these boxes and everything come in, guys. This is why I draw these boxes for you people, so you all understand that how these levels work. A previous resistance will always become future support, and a previous support would always become future, right? So remember this. It's like the same thing as we say. Always expect a dump after a pump, and always expect a pump after a dump. Expect the unexpected, right? Because when you're not expecting it, that's when you get caught out. And we understand we had a support here, beautiful, and we held that support. We understand we had a resistance here and we broke that. We understand that. Now we know we're going to basically come in and we're going to do our best. Basically, maybe even this week, like today, if we close a candle here, I mean, this just changes everything, right? It does change everything. So hold on, let me just get rid of this. If we have a candle here, it changes everything. Also, what I did was I did put a Fibonacci on it, and I said, all right, let me see a Fibonacci from the actual resistance line to the bottom of the channel. So I'm not even calculating the whole thing. I'm just calculating a little bit, and I'm saying, where are we going to go? Well, for us, as you can see, the 46K, that's where we are exactly right now. Okay, so if you look carefully at my high for this particular candle, right, and where we are right now, I'll show you. Let me go on an hourly. I'll show you right now. It will show you the actual price for right now. So current price is $46,024. So we're already close to this line. And if we go back to the daily, so what you can see is on the day, sorry, I'm on 4 hourly, my bad. So if you look on the daily, what you can see is basically the next level we're basically going to attempt is this Fibonacci 1272, which is $46,500 level, right? And after that, if we can hold this, break this, we're shooting straight for the 48. One of the beautiful thing about this is, again, if you looked at my charts before, right, the 48 Fibonacci is exactly on top of this level here. And this kind of just basically goes through. And what we're looking for, remember the data points we were looking for was this particular traffic area here. Remember, I always say, right, guys, whenever we have something pattern like this, there is no traffic. But whenever we have a pattern like this area, this is known as traffic. This is where a lot of battles have been happening. So for example, similar here, we know that in this whole range here, a lot of battle has been happening, but mostly around this areas. Wherever we see a sideways movement, we call them traffic zones. Okay, so I hope this kind of makes sense. So yeah, I mean, if somebody's giving you a hypothetical scenario based on what they feel or what they think, it's absolutely fine. There's no issue at all, right? But sometimes you got to just read the lines and actually understand what he's really saying. I will trade this scenario until it gets invalidated. Well, he hasn't really explained trade up or trade down. Never. He's never said what is he going to do. Is he going to trade up or is he going to trade down? He hasn't explained that, number one. Number two, he hasn't told you where it gets invalidated. What is his invalidation point, right? So sounds low. Oh, sorry, can you hear me now? How about now? Can you hear me better? Hold on, let me see how this audio sounds. Give me 1 second. Sounds low. Let me see. Sounds low, sounds low. Bro, these microphones are peaking out, bro. What's wrong with you? Prince, have a look. Turn your volume on, because I am on maximum volume, my bro. So maybe I was just covering the mic or something because my hand's on top of the laptop, but I don't know. Double check anyway. Because it is peaking out, by the way. You know, when the microphone peaks out, that's actually bad because it will clip. You won't really be able to hear anything I say, but I did turn it up a little bit. Hopefully that kind of helps you. So I hope this kind of makes sense, guys, especially brother Kuram. I hope this makes sense to you, what this really means. We need more. I mean, this guy, look, he's a respected guy. I respect him myself. But what you have to understand is sometimes we just don't want this kind of close-ended thing, like not like, you know, it's like an open-ended thing, right? Yeah, they're not really telling you what the scenario is. Be a little bit more specific with the people. I mean, look, there are fans out there, and this one goes to you, Jaylee. I'm telling you, you're a good guy. I like you a lot, but you sometimes do this, and this is quite annoying because then your people who follow you ask me, what does this mean? And then I'm having to explain what does this mean. So please make sure, try and do the thing properly. Like, you know, here, for example, 46K, correct, it's going to happen. 23K, time signal. You know, try and keep it a lot more cleaner, right? When you say something, just, you know, open it up, tell people exactly what you mean there. So I don't have to do this, right? But then again, you know what? I don't mind. At least then that means I got a job. And when people ask me questions, I will happily answer them. But so this is what we got, guys, as you can see. So what we're expecting, okay? So this is BTC right now. You know, for me, I'm still like what I've seen, this support line, as long as we can hold this particular support line, right? This what is it? This 43K support line, it's fine. In fact, I'm still bullish as long as this week we can hold this particular trend line, right? So we know we're closing the week on the 15th, right? So on the 15th, if we come to this particular zone here, which is funnily just close to this 41.4 now. So the Fibonacci's are telling us if we can hold the 41,427, we're still fine. You know, if we can hold this and bounce off this, we're fine. However, if we do come here, it's absolutely fine. Not an issue. The only time I am expecting a dump, guys, remember this date here, this 27th of August, I am definitely expecting a dump around this area. So please be careful 2 days before and 2 days after. You're warned. That's when we are expecting a dump, exactly like we do every single time whenever the options expire. So please do understand this, right? Now, if you have any questions, please fire away, throw them in the chat, and then we'll talk about it. This is Ethereum. Ethereum created a lower high, so it did suffer a little bit. I mean, yesterday a lot of the so we went on the market cap. I don't know if you realize this, right? So on the market cap, total market cap, yesterday we went as high as $1.85 trillion. So not far from our 1.88 target. And then we got a nice little bit of a dump. And when I looked at the dump, I realized the dump was actually happening on Ethereum. It wasn't BTC, and this is what's happened, BTC dumping while Ethereum is dumping. So Ethereum took a hard hit, and we did talk about this 0618 Fibonacci level. And as you can see carefully, closely, we had the bounce exactly on that level, exactly as predicted. I don't really want to use that word. It's not even a prediction. It's just maths, guys. So we've had this. Today, we've got to see Ethereum coming back into this resistance zone, which you can see the Fibonacci, like this particular level here, the resistance zone, which is the $3,100 level, right? So this would be our new resistance that we need to break above, right? If we do break above this line and we peak above and we close a candle, and then we should be able to test the next lines, right? If we do not succeed, then we've got to come back down, and this would be our new support line. So what's happened here in the last 2 days, right, which is brilliant, is number one, we've created a brand new resistance here, and we've created a brand new support here, which is awesome. This is exactly the type of stuff we need, bro. It's exactly the type of stuff we need. You know, as we move, we need to create these areas. You know, if we have a parabolic candle, for example, I talked about this with someone else the other day on a private conversation, right? And what I was mentioning was, look, if you look carefully, right, this, right, when we look at these kind of areas, so for example here, when we look at this trend line, this is healthy trend line. This is a very healthy trend line because it's not too steep, right? But what we got here, for example, very recently, if you look at this is a steep trend line. So this is a bullish trend line, but this is too steep. When it's too steep, it will fail. It will fail. And we can see actions like this even on the RSI, right? So if we're looking at the RSI, what you can see is what the steep moves do. So when it's too steep, right, it will dramatically crash, right? And this is the stuff that will catch you out. Look at this. I mean, this is almost like, you know, horizontal. It's so bad, right? It's too steep. We don't want it to be like this. What we want is this longer time one. So for example, we want this trend line to hold like this. All right. So based on the RSI, you can see on the daily RSI, you know, we do have a lovely little bullish divergence, which is fine. And what I am expecting is this not to hold. But for me, in my opinion, what I'm saying is we might come down and try and test this line. This is the healthy line. This is the line we should be testing, right? This is a bad line, right? If that makes any sense. What and why is happening on 17th? Hi Yomi. Okay, let me explain to you. So these trend lines that you see, these lines that you see here, these yellow lines are all options expiry dates. So what I've done is I've mapped all the options expiry date for current and the future, and as we move along, I update them regularly, and I put the future options expiry dates. Now, one thing we know about the options expiry date is very simple. I'll show you on the chart, and let me try and see if I can show you. So let's get out of all of this, right? So what we've got is so these are some of the previous ones, and I'll show you some stuff here so you do understand how these lines work. Options expiry is very important. So what we see is usually a couple of days before the options expiry and a couple of days later, we end up seeing either a dump or a pump. But on that day is when things change, right? So we after that, we either have a pump or a dump. So this scenario, we had a pump after that day. You know, for example, here we had a pump before, but then we had a dump, right? So options are very important for you to observe. So here you can see we had a dump, and then it kept on dumping, and then we had a pump, right? So if you follow this, it doesn't matter which cycle we're in, whether we're on the bear market or we're on the bull market, you can follow these specific dates. Yeah, you can follow these. I hate these when people call you when you're on a stream. Anyway, so what you can see is when we start dumping, then on the options date we pump, right? So we see whatever the happened before, we see the opposite, right? So you can see these dates, they do matter. Like here, for example, we pump, and then just after the options, when we did do it on a green candle, we started dumping, right? Same scenario, you can see it doesn't matter where it is, it will always play out the same way. So here we started dumping, right? You can see we started to dump and then we started to pump again, right? Matter of holding and not holding. So this is more of a kind of a trading signal. So it's the same pattern every single time. Doesn't matter what color the candle is, it will do the opposite. So you can see here, we talked about on the 30th of July, we talked about the options expiry and how we had green candles before. We were expecting a dump exactly as predicted, and we have posted videos on this as well. And you know what? Nobody talked about this. We already knew about this because everybody that views this channel knows about these specific dates, and we've talked about it. I've even told them to take screenshots because look, we're months in advance. All the way up to December is already mapped. You know, once we go to December, then we're going to map the next year as well. So that way, everybody always stays minimum 2 steps ahead, if not 10 steps ahead, right? So that's the idea. I hope this kind of helped you. I hope this explained exactly what this works and what this does. Obviously, for the thumbnail, you guys saw that I put this golden cross. So I hope the golden cross also makes sense to you as well, how the golden cross works. You know, we are expecting the market to go up, but don't get too excited. It's not there yet. Only thing we have done so far is break above, and this was today. So we attempted it yesterday, we failed. Today we've broken above the 200-day moving average, which means a lot of retail market are going to start to FOMO a little bit, right? Are going to start to FOMO, and I can tell you this as well. If you look at this particular area here, not this one. Is it this one? Yesterday we were at 74, all right? Today we're showing 65, but I can assure you this hasn't updated. It's got another 8 hours to update. I can assure you we're a lot more higher today than what the number is showing, right? It's showing 65, but it's not. This is only from last night, so this was technically yesterday's. This is day before yesterday, so it's always like late by a day. So when it shows it, shows you what happened yesterday. So this is actually yesterday. So when they say now, they shouldn't say that. This is yesterday. Okay. When this candle closes, it will show you what happened today. If that makes any sense to you. So I know it's a lot higher today. The greed is a lot higher today. Really, really good. Let's see where that goes. But yeah, I mean, it's been awesome from looking at everything, looking at this chart. All I can see basically, we are expecting this cross to happen somewhere around this 24th September would be, you know, scenario right now. And obviously it can actually come shorter. I mean, we can redact and we can even do it sooner. So let's see what happens, you know, but for now we're just observing. Only thing we're taking note of is the trend line. So we're taking a note of the bigger trend line and making sure that we hold this trend line. Okay, as long as we remain above this trend line, we are going to be bullish. It doesn't matter. Let's see. Yomi asked another question. We still need to test the 40k or below to complete a formed bottom. Not entirely, no. We don't have to do anything, because if you look carefully, and I'll activate what I'm going to do, I'm going to take the drawings off. Also, I'm going to take the lines off, right? So you know, when people talking about formed bottom and everything, one of the fact about this is, like, if you look carefully, there's 2 ways of looking at it. The number one way of looking at it, if you look here, this would have been the low. So what we had here was 1, 2, 3, technically a triple bottom. Now on a triple bottom, we have a low point, we have another low point. So this low wasn't a good low point. So we had this was lower. This means the bears had more control. But then when the bulls took control, we didn't go lower than this. And that created our technical triple bottom. And usually when we hit the third bottom, we usually go bullish. So the pattern that you see on a triple bottom, I don't know if I can show it to you. Let's draw it here. So this is what we see on a triple bottom, right? We might actually even have this where the bears have control, and then we come here and then we do this. And what happens is we have this area where all of a sudden, let me draw it this way. Yes, I just realized. Let me see what I can do. Let me draw it this way. So I'm going to put a line here. Let's make this large. Put a line here, and I explain this to you exactly how it works, right? How a triple bottom works, right? So let's do it with this. So what we do, we have a bottom here, bears control. Come back here, right? Bulls are okay. This is usually known as a bull trap, right? Come back here, bears took control. So as long as we're same as this line and same level, we're fine, right? Bears took control. We come back here, bull trap again, and then all of a sudden we come here and we bounce. That gives us our triple bottom. So what happens here is you can see that on the double bottom, the bears were in total control. Bulls were being trapped and bears were winning. And then what happens, the bears lose the battle when we come into this zone where we create a higher low. This is exactly what we did on this particular level. Now, if you look at the line chart without the noise, it's a different story, right? On the line chart, without the without the candles and everything, or the wicks or any, because we need the body, right? So remember, the body is the fact. The wicks are just the story. They're not the fact, they're just the story. So what we see here is we've had this specific trend line. I think I need to activate the drawing again to show you. So we had this trend line here. Actually, no, I have another chart for it. Oh yes, I do. Yes, I've got this chart for you. Let me show you what I mean, right? So what happened here is, while everybody was obviously expecting different bottoms and everything, we were tracking it with this particular line, and I'll make it larger just to show you. If you look here, what we saw was a descending wedge, and a descending wedge is always bullish and it breaks out. And what we saw was on a shorter time frame. So this was on a longer time frame, and on a shorter time frame, we saw a second descending wedge, right, or more like a parallel channel, also breaking out. So when we saw this, we knew we had confirmation that in a shorter time frame and a longer time frame, this was our bottom, and this is now going to bounce. And this bounced exactly as we basically talked about on this particular channel, right? But seeing this moving too fast, I have to be honest, it's not bullish at all, right? This is actually kind of bearish. For us to be bullish, we need to go this way. So what we need to do is move this particular way to be more bullish, right, and more sustainable. As we move, we can create new support zones and move forward. But when we do this kind of stuff, it's kind of worrisome. I'll show you why. Not this one. What is? Yeah, okay, I can use this one, right? So what you see here is basically we've created a channel, and these channels, as I said, like if it's too steep, they're actually very, very dangerous. Very, very dangerous. So please do understand that, there are some areas where we don't want to be, and this is one of those areas. Like, this is one of those zones. If we create this parallel channel here, right, like the way we just did, right, we've got the high here, we've got the low here, and we're going to bounce on this. These can break easily, right? These can break easily. But good thing is, as I said, like when we talked about it, we talk about this trend line here. Good thing is as long as we can hold this trend line, we're fine. And I talked about this on many videos, and I said, look guys, if we continue, it doesn't matter what we do, all we have to do is break above. So we were down here and we were talking about it. We said we had to break above, and then we need to confirm this line and then shoot up. And once we do that, if we can create enough resistance points, right, enough support zones, then this would be our bottom, and we just continue. And if you still look at this pattern and then say, okay, fine, this is a pattern, so what is this whole pattern showing us? Well, what we see is we have our A, B, right, and then we have our D, had that, and now we have our 1, 2, 3 pattern, 4, 5, and then we shoot up, right? And we talked about this on another video as well. So remember, the ABC pattern works on the upside and the downside. So on the shorter time frame, this is bearish. This is definitely bearish, but I don't think we're going to see the 40k. What I am looking at, as I said, if you look at the numbers that we've got here, so far what we're looking at is the 41.4. So close enough. I mean, 40k is close enough, but the 41.4 is more likely to bounce. As long as we can hold this, we're fine. As long as we do not enter these yellow boxes which we previously broke out of, we're fine. Okay. So there will be some changes I'm going to be making, guys, on some of the charts. Some of these drawings I am going to get rid of. I don't think I need too much mumbo jumbo in there anymore. And also this specific longer time chart, I am going to keep up because I think I've got too much there. So what I'm going to do, remember what I said, this box is valid. All the other boxes are now gone. All the other triangles and drawings we had, they are gone. And soon I'm going to take this off as well, but only after we confirm. So until we confirm, this box is still very valid, and this box is still valid. So we need to go above a certain amount in order to invalidate it, right? So yeah, I mean, other than that, there's really not much else to do. So where we are right now, wow, okay, this is awesome. This is awesome, bro. Check this out. I want to show you this as well. This is a last minute thing. I want to just show you. This is insane, right? So this Fibonacci you see here, right? This particular Fibonacci is based on the top to the bottom, and it's a projection. So we're saying if we take it from the top, right? So you can see we take it from the top and we take the bottom and we say, okay, what's the projection? And the projection is $103,285. We look at the Fibonacci 618 level and you say, well, where's the Fibonacci 618 level? Because if we are going to be doing this, then we are going to have to respect these lines. And this Fibonacci is 41,864, right? 41,684. Now, if we come into here and you just saw, we just did this Fibonacci just a while ago. So we have no connection with the other one. Well, 41,400. So it's off by $400, but it's pretty accurate. Pretty accurate, I have to say, right? So this becomes our thing. So end of the day, we might actually see a bounce. We might see a bounce and come to this level. Absolutely fine. And then shoot up. So remember, guys, if anyone is showing you this trend line, just be careful. This trend line doesn't really matter. This is not a trend line. This is too steep, right? Someone might do this to you just to make it not steep, but look, the fact is different. Let's put it on auto and we'll see the fact. The fact is, look, this is auto and it's telling you this is right. We don't want that. We want to see something moving in a different way, basically. So our lines and everything shouldn't be there, this, there we go. So yeah, what we're looking at basically, we don't want, this line is not going to hold, obviously it's going to break, so we are going to test this level. But as I said, as long as we can have this particular support and resistance zone confirmed, okay guys, we should be okay. I'm not that fussed. I think everything looks bullish. I think we just need one candle to close above this and then another candle to confirm above this, then everything changes, right? Everything changes. So let's have a look at that and see what happens from that. And also I had Ethereum to BTC. I was just checking basically how far we are from where we need to be. So we need to break this particular area, which is the 0.08 Ethereum to be. We can get this and we should be okay. So far, again, we've got this steep trend line, which I'm not happy with, right? In my opinion, this is not sustainable, but this trend line is very, very much sustainable. So in the short term, if somebody ended up seeing something like this and it breaks, don't panic. As long as we can stay above this line, we're fine, right? This line is more of our trend line than this line. This is just a temporary short-term trend line. It's spiked because of the pump we had, but I wouldn't trust this line. I wouldn't trust this particular line. I'll trust this line more than that line. This is much more sustainable. This is not. We don't want to go too far, too fast. You know, move the market up too fast. That's what I'm saying. So yeah, other than that, everything else seems solid, super solid. I was looking at how many Ethereum we've been burning, and we've burnt so far $56 million worth of Ethereum. So everything seems good. Also, I was looking at the news, looking at some of the Bitcoin news and everything regarding Tenet, that, whatever. And I can tell you, so far, nothing's bearish. Everything's all bullish news. And I did have a tweet storm yesterday. I did send out a massive long tweet regarding this selling. And I was like, okay, what's wrong with you people? I don't really understand, right? Because honestly, it doesn't make any sense to me here. We just did another $5 billion, so 1.86 now. So I was having a go at people. I was like, what's wrong with you people? Isn't cryptocurrency supposed to be decentralized? So why are we giving into these centralized organizations? And who gave them the right and the power to make centralized rules, all right, or laws for decentralized stuff? I don't understand. But what I can see is, because of all of these centralized governing laws and whatnot, decentralized protocols are going to be pumping. So I am definitely bullish on more on the decentralized protocols. Doesn't matter what it is. Definitely looking at those, and that's where I'm going to go basically, because all of this is just nonsense. It doesn't make any sense, right? When you look at it, it doesn't make any sense. It's like, okay, I don't understand, how can centralized government come and govern something centralized? Well, I know exactly how. That's because of the centralized exchanges. We're literally handing it over to them in a golden platter, and this is just stupid. I just think this is stupid. I think more people in the community need to come together and create decentralized protocols, right? And basically just do it that way. So yeah, I'm just going decentralized now, because all of this everything is just nonsense. I mean, you can see how much Binance has been affected. Just insane. Binance is, I think they had a new CEO or somebody like that. They even left. It's just insane. So yeah, I mean, look, if we want to go to a $10 trillion market cap, we are going to see bureaucracy, we are going to see diplomacy, we are going to see all sorts of politics, right? What we need to do as a crypto sphere is find ways to decentralize ourselves from all of this, right? The sooner we can decentralize ourselves from all, the better it is for us. And we're going to... So yeah, guys, other than that, if you have any other questions, please fire away. If not, then just gonna call it a day. Any questions? Go. Also, looking at the London upgrade nodes, we can see only 1.9% remaining to confirm. 1.9% not ready. Everybody else is ready. So yeah, I mean, it's been 100%. It's been very good. So let's see where that goes, where that takes us, basically. Also, I was looking at liquidations, basically, and I can tell you. All right. So this is showing you last 1 hour, 4 hour, 12 hours, 24, and these are the top ones that got liquidated. So a lot of Ethereum got liquidated, BTC got liquidated. You can see the total, right? We can track the symbol, or we can just predict it the most, right? That's all we need to see. So this is a lot of Cardano, exactly how many Cardano, exactly how many BTC, what's the value of what's been liquidated. So we can see the heaviest liquidation is happening on the Ethereum right now. Monero, of course, bro. David, no joke, bro. Monero is a different coin. Monero is the king of privacy coins, and they're trying to do everything to stay decentralized. I'm not joking. It's one of my babies. It's one that I never talk about, and one I will never talk about, because there's no point. Monero, if you believe in privacy, it's the one that you hold, right? You keep that, because there's nobody going to be able to stop that one, right? And trust me, exchanges, centralized exchanges, and everybody, they hate that. They hate Monero, right? They hate Monero, but Monero is just another beast. Monero is another beast. I'm telling you, I've been telling people about Monero since it was here. Monero is another beast. You just buy and just hold on to it. Maybe it's used for nefarious activities, but I can tell you, right, everything for nefarious activities, right? Trillions of dollars, right, of cash, right, globally. So I'm just globally, I'm thinking, right, trillions of dollars cash get, scammed, like they use for scammed and nefarious activity. Cash is untraceable, right? And Monero is nowhere near that. If you look at Monero, well, what's the total market cap? Here we go, 4.8 million, right? 4.8 billion. Sorry, 4.8 billion dollars. So this is nothing. This is like 0.5% of the trillions that they, scammers use. So of course, you know what? Governments don't like it because they can't snoop into this. And this is why I like this. I think if everything becomes centralized, right, and I'm being honest about it, right, if everything becomes centralized, like the way these centralized governments are trying to take over with their legislations and laws and everything, and I'm not against any of them, I mean, most of us, we use exchanges, we are definitely doing our KYC and everything, right? It's not a problem. But now they're trying to enforce it even more, trying to tax and this and that, and so many different things. Like, they just want to make life hell for us, right? And give us no privacy. they, you know what's going to happen when they take centralized exchanges? They might even lock us out. They might even have the power to lock us out, like they sometimes lock you out of your own bank. Your bank says, oh, go prove us, you know, where you got this money from. And then they seize your money and they block you and they say, come over. That's what they're going to do. They're going to hold you hostage with your own crypto through centralized exchanges and centralized coins. You know, like when I look at stuff like Bitcoin, for example, I mean, have a look at this, right? So this is GBTC, right? Grayscale Bitcoin, well, not an ETF, but Grayscale Bitcoin, right? And what you see, they own 650,000 Bitcoin and growing. Well, currently they're selling for a discount, which is fine, but these are the coins they own. And the more people buy shares, the more coins they buy, right? And they hold. So what happens is this is becoming centralized. These guys are centralizing these coins. Maybe not enough already, but trust me, over time, if the demand grows, they can become a centralized entity. And then the situation we have is something like SEC or whatever comes along and says, well, no, you got to shut your operations. Well, these guys got to put their hands up and basically just sit there like a little sheep and hand it over. And then everybody that's ever worried about Bitcoin or crypto or anything like this will have to panic. This is a disaster waiting to happen. It might be great in the short term where they're buying and they're holding, but this is a disaster waiting to happen. This is what centralization does to us. The centralized organizations work based on legal papers. And all you have to do is slap them with a legal court paper and you've got a problem. And it doesn't matter which country you're in. The same story in every other country. Anything that's centralized, this is what happens. So that's why I'm a big fan of projects like what do you call this? Where is it? I forgot the name. Thorchain, right? I'm a big fan of Thorchain, a big fan of Uniswap, big fan of other protocols that are coming. And also, good news about XMR, bro. I'll tell you one thing about XMR as well. XMR is finding a way to create their own exchange where you can actually buy, sell, trade, and exchange other cryptocurrencies, specifically BTC and Monero. So they're finding a way to do an exact swap, so you can swap your BTC for Monero and Monero for BTC. Vice versa. I think that's going to be awesome, right? And also remember, Monero's code base is using the same Bitcoin code base, but ultimately it has a privacy ring signature network in there where kind of messes everybody up. So the person sending knows the person, so it's the person receiving the money and the person sending, they know each other, but in between that, nobody knows who sent to who because of the ring signature. What about Doge, bro? Oh, Doge, bro. Doge is just one of those. Remember, it's just going to carry on. I mean, Doge managed to establish itself as the rank 7. Imagine that. Sadly, what you're seeing is this price, right? This market cap wouldn't really increase, right? Remember why the market cap wouldn't increase. The biggest problem is it's printing 10,000 coins per minute. So it's printing more than the demand. If that makes any sense to you, right? Soon as Monero stops printing infinite amount of coins, we're going to be okay. So I think there's some people talking about it. I'm not sure. I think even Elon Musk was talking about it as well. They're talking about how they want to put a cap on it. It's rumors, by the way. It's not confirmed, so please don't take my word for this. But rumors is that they want to put some sort of a cap on it. I'll tell you one thing. If they put a cap on this will explode. I'm not even joking, right? As much as this was a meme coin, this will explode if they can put a cap on it. There is some work going on. I know Litecoin Foundation is trying to do some other work with it as well, because they do work on the same algorithm, by the way. Litecoin is who's mining all of this as well. So, they're both together, working together, but this is nothing. Honestly, this is absolutely nothing. For me, when it comes to Doge, I could see this going to, say 100 billion, right? If they put a cap on it. Other than that, it's just a pump and dump coin, right? Basically what happens is every few months or whenever the pump happens, someone comes along and basically sells their bags that they were holding, and then new people come in, millennials or whatever they want to call them, like, youngsters coming, and then they end up being the holders, and the cycle continues. This is a cycle. You buy and you sell. If you're holding, just hold on, because I think this market pump that's happening right now will definitely benefit it, because one thing that's going to happen, and I'll show you what I mean, right? I've got it here. So one thing that's going to happen is, imagine Bitcoin, right? So we have a Bitcoin pump, and this is on a total market cap, what I'm trying to show, right? So Bitcoin pumps, Bitcoin stabilizes, then altcoins pump, and then they stabilize, then Bitcoin takes over and they stabilize. Ultimately, we're going to see this pattern where Bitcoin pumps a few days, and then, you know, the alts pump another few days, right? I mean, this is heading towards the $1 trillion, right? This is heading towards the $1 trillion. So when it does, it will probably stop and then allow this to catch up, you know, and everything else will catch up. And when that happens, this dog coin, is definitely going to start climbing as well. I mean, remember the high we had like 70 or 80 billion dollars, remember? And here it's showing 90-day low is 48%. It's coming, I'm telling you. This meme coin is coming, and I'm sure we're going to see some tweet storms from Elon Musk very soon, right? We're going to see something very soon from it. So this is definitely coming. Definitely. I mean, I don't remember if you guys know that I'm not a big fan of it, but I did just pick up some when it was really, really down. I can't remember how much, but it was like dead down. I said, you know what, it's just worth holding some just in case. Litecoin Foundation, the developers, and Ethereum, Elon Musk, they actually do work together and genuinely create a solution. It's worth holding. You know, when I'm talking about Dogecoin, I'm not talking about millions of coins. No, only a few thousand coins. That's it. Nothing more. I don't need anything more than that. So I'm just holding a few thousand coins, and that's if it's successful. If one coin could be worth $1, great. If not, who cares? I didn't lose much money. So that's all I'm going to say there. But other than that, like, guys, everything. Look at the market. Where's my bubbles gone? My bubbles. I must have deleted it. Yeah, I deleted it. Anyway, I was going to show you my bubbles, basically. I do have it here sometimes, but I don't know where is this right now. Yeah, I must have deleted it or something. But anyway, so the market looks solid. I'm not really fussed about it. I think it looks very good. And of course, when it comes to beat, guys, where we are right now, we are going to expect a dump, right? We have to have a dump, right? We're not just going to go, pump all the way through. You know, we might even see another situation where we have another 7-8 day pump. That's fine. But ultimately, at some point, we have to see a dump, right? We have to see a dump. We can't just go on green forever, right? So we're going to see a few greens, we're going to see a few reds, green, reds, carry on, you know, and the reds will bring us back down. But if it does, like for example here, this is a support, this is a really great support zone here as well. So we've got a lovely support here, which is the 38k. But I think the trend line is going to be a lot more stronger indicator for us. This trend, you know, the trend line that we have here, when I just basically made it into 1 pixel, this one here. So this trend line is going to be a lot more key for us to hold than anything else. But if we did have a support, you can see support would be a bottom level here, and we are following this with the Fibonacci. Right, and based on Fibonacci's, remember, whenever we do these kind of pumps, we always expect the supports to be at the 618 level, currently showing at 42,203. But you know, there's loads of metrics we can follow. Is there anything else, guys, you want to ask me? Anything else? Hope this video was informative and helpful. If you new to the channel, thank you very much for sticking around and watching. Like, share, and subscribe. Really helps the channel. We see where we go from there. Any other questions? Anything, guys? Anything? If not, yes, it's almost 1 hour now. So guys, I'm gonna cut the stream because YouTube doesn't like it when you go above 1 hour. So yeah, like, share, subscribe, and I'll catch you on another one very soon. I'll probably drop some shorts, and I'll do some premiere shorts. Remember, on the premiere shorts, guys, or any video I premiere, I'm not actually live. Those are pre-recorded. These are live videos where I'm sitting here and talking to you on a thing as well. So these are the live videos. Other ones, the reason I premiere them, so you can all get the notification. That's all it is. So you can always comment on them or something if you want, but most of them are just there for the notification purposes, nothing else. That's the only way I was able to make sure everybody gets a notification. So also for your notifications, guys, remember notification bell, press all, so you get all the notifications, because I do other posts as well. I do community posts, other posts. And also I want to thank the subscribers, the members as well. Thank you very much for sticking around and still being members with me. Really helps the channel, and obviously, you know, community grows. The more you share, guys, the more you like, the more we grow. That's the idea, right? So please like, share, subscribe, and let's see where we can take this. Other than that, my friends and brothers, I'm gonna love you and leave you, and that's what Brother Fulham says, so I'm gonna say that as well now. Other than that, like, share, subscribe. Adios, my amigo.